China has slipped into deflation as consumer prices fell for the first time in more than 2 years. The weak data reinforces expectations for measures to further stimulate domestic demand. The consumer price index, the main gauge of inflation, declined 0.3% in July on the previous year. The fall is less than what markets anticipated, but it's the first negative reading since early 2021. The prices of food, transportation and household goods all went down. And while consumers are less willing to buy, that's impacted inflation. On the production side, the producer price index has also continued the downward trend, posting a year-on-year drop of 4.4% in July. Ahead of this announcement, the government set out a package of policies to support economic growth with a focus on small businesses in mid-July. Well, let's talk further on this. William Lee is Chief Economist and Executive Director at the Milken Institute. Thanks very much indeed for joining us, William. First of all, there is some fluctuation in the numbers, but it does seem that an economic trend is developing. Would that be fair?
Oh, absolutely. I think it's very clear that China is in deflation. The real question now is, will it become entrenched in people's expectations? Because if it does, then when people continue to expect price to decline, the last thing they're going to do is consume and buy things. They're going to save money and wait until prices go down even further.
So what are the ramifications of that in terms of the domestic economy? And also, what effect might it have on the international business community?
Well, China's having some headwinds coming out of COVID, and they're trying to stimulate the economy to be able to grow at a 5% rate. Well, right now, the basis of that policy is to get consumers to increase consumption and to boost domestic demand. And with deflation on the horizon and becoming likely entrenched in people's behavior, people are not going to want to spend either for consumption or for private investment.
Well, what tools does the Chinese government have at its disposal? I mean, what's it likely to decide to do?
Well, Andrew, that's a great question, because right now the speed is of the essence. The Chinese authorities have got to implement the measures they talked about, which is to boost private sector confidence, to boost private sector spending. And the best way to do that is to get money into the hands of consumers and businesses and convince them not to save it, but to spend it. And that's going to require restoring confidence that the government is going to be partners with the business sector, the private business sector.
I mean, is it a pertinent question to say, how familiar are the Chinese public? I mean, they're a new international business community in their own right. How familiar are the Chinese public to respond to these kind of signals coming from national government?
That's a great point, because the policies over the last several years have maybe put some doubt into people's minds as to how the government views the private sector. The policies that have tried to hold back Tencent and Alibaba have caused people to wonder, if I were to spend money now and boost my private spending and boost my private businesses, will the government turn around and knock me down?
Yeah, it's actually culturally a really interesting test of state capitalism overall, isn't it?
Absolutely. In fact, this is a test of whether the existing model of economic growth is something that's viable for the future. China has really benefited from export-led growth, and right now it's switching to a model of domestic demand, domestic consumption-based growth, and that's going to be very hard to do unless they convince the private sector to go along with them.
I mean, we can't help thinking of Japan and the difficulties that they had after some wondrous growth in the 80s, where they became the economic miracle, and how that changed. Are we potentially looking at a kind of lost decade scenario for the Chinese economy?
We have echoes of Japan in the sense that the demographic problem for China is similar to what Japan is experiencing, perhaps not as extensive, but the real problem is deflation. Japan entered into a decade of deflation, and that is really what caused a lot of consumers not to want to spend. The last thing China is going to would allow is for these deflationary pressures that we see in the data to become entrenched in behavior.
Interesting times. William Lee, thanks very much indeed for joining us this evening.
Thanks for having me.